All right. Good morning. Good afternoon. Good evening, wherever you are. We're going to do another update this weekend, market update number 2. We're going to go through ETH, BTC, others, basically is my proxy to cover altcoins. CleanSpark, I've had a few requests for that. Bitcoin miner, SPY, Nasdaq, dollar, yields, gold. And I think that covers it. You all saw my video from Friday, or may have seen my video from Friday. Nothing has changed in terms of the overall outlook for Bitcoin, looking for a very big move in the next several weeks. And so I'm going to start here with ETH BTC. And, I'm hearing a lot and seeing a lot of concern over ETH and the ETH BTC pair. This is a weekly chart going back all the way to the inception of the ETH BTC pair. I put it in line format because I feel like that's a little bit, sends a bit more clear picture in my mind as to the key important levels, what's going on. And so, we're up against a very important trend line that goes all the way back to 2017. Is it going to hold there? Is it going to breach the trend line and continue to flush down lower? I don't know. But what I do know is we've got a bullish divergence here, right? The pair is making a lower low. The power in the drop, as measured by RSI, is making a higher low. So there's less force behind the move down as opposed to the move down in October. And that's what you'd want to see at key inflection reversal points. Now, I've kind of drawn this pennant type structure, and a very common structure that we see play out in pennants as they're kind of consolidating, and everyone wants to see, a clean breakout. But what we often see is, and these are some of my favorite setups, you see the breakdown. It's called the old end around, and then it kind of reclaims and fakes everyone out and goes the other way. So that being said, wouldn't surprise me to see one last flush here to kind of complete this divergence and a reversal back in and to the top end of this range at a minimum. So that's kind of how I'm viewing this chart. The downside to me looks relatively low compared to historical averages and means and trend lines. We are also respecting a very important level. We're at the bottom of it, but an important level that goes all the way back to, again, 2017. That really was the line, the demand zone that, right, this price action was hovering above, and then obviously below, and below. Those are awful lines. You get my point. Next, let's go to others. And others, this chart's looking fantastic. If I don't say so, just in the most practical sense. And what do I mean by that? The structure has been playing out very similarly to what we saw back in 2018 to 2020, 21. Very similarly. And what are the most important areas I'm kind of looking at to make that claim? Well, if we go back to 2018, the market had a very important area, this triangle that I've drawn out here, this really important area that acted as support, deviation, reclaim, and then undercut, resistance. That was really the key to sell or go short, fake out, attempt to get back in that range, and no, new lows. Okay. And then as we see, we're coming back up towards this important range. Nope. Well, let's get back up towards it one more time. Nope. And then bust through it again, and you get this little retest on this important region. not a parabolic increase, but a nice vertical accumulation structure prior to the parabolic increase. Okay. So that's the previous structure. That's what that information has kind of told us. Now let's zoom in to what's going on today and simply observe market structure. That's all I'm looking to do in this exercise, is inform market structure. And very similarly, and this is the area, this 3, 4, 5 blow off, okay? This demand zone is what launched price to these May highs in the altcoins. That's a key zone. That was the pivot that then acted as support with the deviation under it, broke through, and you can kind of consider just a ceiling on the whole accumulation bear market for altcoins. And so what do we have happen when we broke through that significant, important demand, now supply structure? You got a rejection. And then we went back down, deviation and consolidation, back down. And this was when I started really covering the altcoins using others. As I noted, this section where the wicks were just getting shallower, we're up against an important downtrend, and price just refused to make lower, these significant lows. And so from there, we saw what I expected to see, which was a massive move out into this demand zone and out of the demand zone. And now we simply, this past week, got a retest into this demand zone, and it's held. Okay, folks, and that's what's going on here. It's held. So from all practical purposes, and the way I'm visualizing market structure looks very similar to me as it did when this demand zone held back in October of 2020. Now, you also will notice what happened coming out of that demand structure. Alts didn't go parabolic here. They increased substantially, but Bitcoin took the lead at this phase. Okay. And so they rose, but they didn't rise as significantly. So we could expect, again, history isn't going to guarantee what's going to happen in the future, that a reasonable base expectation would be some type of vertical accumulation prior to a larger parabolic type run to follow. So that's how I'm viewing the altcoins. Throw up the 5 weekly EMA. I mean, look at this. So I just threw up 5 weekly EMA, and this is what you want to see, right? You want to see important technical areas hold, especially in early bull trends. And what we have here is you've got, let's see, you've got a test of this 9, and then a hold, and then it closed above the 5. And staying above that 5 in a vertical accumulation structure is one of the hallmarks of a vertical accumulation structure. Testing these 9s, staying above the 5s. When you get when I would expect to see a real first type correction, major correction, I would then be looking to this 20, right? And I don't see that coming anytime soon. I really don't. This just looks like it's early stage vertical accumulation, and I would expect to see a test of this 20 much later. And so that's my update on the altcoins. Next, let's do CLSK, CleanSpark. And I'm not a real expert on the miners. All I'm doing is technical analysis based on historic patterns. And these could be wrong too. They could be wrong on both sides of the coin. I'm not a financial advisor. Just as a reminder, don't take this as any kind of financial advice, just educational purposes. Do your own research. What do I mean by that? So back in 2020, I had Riot projected to go from 1 to around 40 based on some analysis, some technicals, but I was wrong. I was way wrong. It went from 1-ish to 80. I was 100% wrong. So I say that such that I don't know when I'm comparing what CleanSpark is doing today, or Riot or Mara, to very similar patterns that I saw 3-4 years ago. Those miners could be significantly different today in terms of their actual fundamentals than they were back then, and I'm not the expert in that. And so these are pure speculative type charts, and so I say that because it's important. I say that because it's important because nobody knows how high or how low these things are going to go, and these are just, don't take what I'm saying as, oh, that's where it's going, because on the high side I most certainly could be wrong, and on the low side I most certainly could be wrong. Anyway, that being said, the structure in CleanSpark, I mean, looking at this chart, CleanSpark it's just telling me it's been leading. It's been leading the miners in terms of where we are now. And if you'll notice when I did Mara and Riot on the Friday video, Mara came out and is right here, retested this breakout, and I believe is priming for its next move. CleanSpark hasn't had a really good retest. It really just blew past this region and is still consolidating well above it. And I'm not saying I even expect a retest down here, because if Riot and Mara and Bitcoin I believe are going to run, then CleanSpark's going to run. The highest probability is CleanSpark's going to continue to run. So I just don't see, as opposed to back here in 2020, you had 1-2 retests of that important region prior to its fifth. Now, I don't believe we've hit our third. I don't believe we've hit our third wave here. So what I'm expecting is continuation. This third to finish somewhere in the 40 region prior to any type of meaningful correction, and then a fifth at a minimum at the 87.90 level. Let's take a look at the EMAs on CleanSpark as well, because last week was a tough week for miners. But again, from a technical standpoint, it held its 5. It didn't even get down to the 9 on the weekly here. And this bull market behavior. This is bull market early expansive behavior. Came down, breached the 5, reclaimed it by the end of the week. No touch of even the 9. And that's normal to get down to the 9 and to pull back in a pre-expansive or expansive type move. And so could that still be in front of it at 895? Sure. Again, could we still get a retest of this important region? Sure. But that's just how I'm reading this right now at the moment. All right, what is next? I think we go back into TradFi next. All right, next is SPY. And SPY has had a nice little correction. I didn't really see it coming down as low as we're getting right now, but that hasn't changed anything. I'm very much in these bull trends. I favor the continuation patterns, but again, nothing unhealthy in this move. I still think the majority of this move is in front of us. I know everyone's looking at this level here, but everyone's looking at that level. And so the risk reward for me here just favors continuation. It just favors continuation prior to any type of meaningful pullback. I'd be looking for in February. So nothing material to update on the SPY chart. Nothing goes up in straight lines, right? Notice these patterns, just minor consolidations, and then the continuation of the trend remains up. Let's go to Nasdaq weekly. That way we can kind of visualize the markets on a weekly time frame as well. And so the Nasdaq is, again, just a healthy pullback. I think the major correction is behind us. That 3-4 that we made, that essentially July through October 2-month correction, had a lot of energy in it, and we're just in the early stages of releasing this energy to the upside, much like we saw back in July of 20 or August of 2020 through November. We had pullbacks, you had red weeks, and the dominant trend continued to grind upwards prior to any type of meaningful correction. This is our second red week. I'd be shocked if we had a red week next week. I'd be really shocked. I really would, because the dominant trend here is up. And let me just throw up the EMAs here on the weekly. Yeah. And this is bull market. What did I just say about bull market expansive behavior? Is for me, the key moving averages in expansion are the 5 EMA on the weekly and the 9 EMA. And the 20 is something that I would expect to get challenged or breached with quick reclaims in major corrections in the context of those uptrends. And so we saw that here in October, right? We got a breach of this 20, 1 week, 2 weeks under it, and then a reclaim, a very quick reclaim, engulf 2 weeks of price action, really 3 weeks. No, engulf 1, 2, 3, 4, 5 weeks of price action, 6 weeks of price action, excuse me, in one candle at the end of October, and reclaimed all those moving averages. That's a powerful signal. That's a powerful signal. And so if we look at what's going on right now, we had a breach of the 5. We haven't hit the 9. So that's most certainly a possibility. I just don't see us coming down to test this 20 at 14,000. I just don't. I think it's too premature. I think it's too premature. I think something like that happens, after we get up here, somewhere in that area. But again, I could be wrong. That's just the way I'm visualizing it. We're at a key important technical area that goes all the way back to this sub-wave 5 peak in February 2021, and the market's hovering over it. So until otherwise, I think that most of this local correction is behind us, and resumption is the major next move. Let's put it that way. All right, let's go close that out and go to the dollar. All right, the dollar, we talked about this last week, didn't we? We talked about nothing goes down in a straight line and counter trend moves. And so this is the daily chart of the dollar, and let's just kind of observe. Let's observe what we're looking at here. That's the channel. Okay. Actually, let me do this a different way. I'm just going to clone that line. This is the established downtrend in the dollar. Okay, objectively speaking, that's the established downtrend. What did it do last week? Well, it broke out of it. It broke out of it, right? Let's look at this area. Broke out of this downtrend, and so is this a change of trend? Not yet. Not yet. It's not. Why? Because of this level. Okay, that demand level that then turned into supply. Okay, so this is demand, which then turned into resistance, which is supply. Supply downtrend. We're back into the supply, wicked out above it, but we haven't gotten any type of hold above that demand. And so that's the dominant. I mean, these trend lines are secondary. Okay, these trend lines are secondary for me. What's dominant is local supply and demand levels, and that's what we're looking at right there. And so for this really to be a confirmed trend change, I would need to see a weekly close do something like that. That would be a trend change. This is not a trend change, in my opinion. In my opinion. And this blue level I've got 102.952. Why? I mean, this now supply level. Let's just throw up a weekly chart. Why is that important? That goes all the way back. Look how far this goes all the way back, folks. That goes back to supply from January 2017. What do I mean by that? Well, this is what I mean by that. Supply, resistance, supply, resistance, supply, resistance. That is a very important key technical level that goes back to 2017. So that's the way I'm visualizing the dollar. My base case is continued downside unless we saw what I said I'm looking for to really confirm a trend change, which we haven't seen yet. Let me get rid of that. Let me get rid of that. And then let's go to our next chart. What is our next chart? Gold. I mean, gold there isn't an update here for gold, folks. It just continues to show strength. This is a strong consolidation on a weekly time frame at the top end of all-time high range. That's just bullish. That's just bullish until proven otherwise. And most certainly you could get one of these guys. Most certainly you could get one of these guys. However, you know my views on important key technical levels. This is just too easy of a trade for anyone that's trying to trade gold, is to say breakout, retest, and this is the area. This is the area of interest. That's just too easy. Much like we saw with the Wyckoff I presented all fall with Bitcoin. My assumption would be this goes and you just don't get the retest that everyone is looking for when it goes. If it goes, when it goes. If it goes, when it goes. The bearish scenario here would be kind of coming back down here, right? Something like that prior to a move back up on a weekly time frame. Let's throw these EMAs up. Yeah, I mean, again, just things you see in bull markets. Things you see. What are things you see in bull markets? I just went through this exercise with you folks, right? The weekly 5, 9, 20 EMA. And I'm going to scroll in, and what are we seeing? We're just seeing just technicals respected. So this week we had a test of the 9, that's my second, a 9, and then a close above the 5. Okay, bull market behavior. Bull market behavior. That's how I read that one. Next is our yields. Yields would be something to watch. Yields will be most certainly something to watch. I talked about last week the area of support being, and this is a weekly chart, the cloud. Right, this area here, support kind of front ran the cloud. All right, we got a little demand zone here. Let's see. Let's just take a look at this in another way. Let's kind of go back and just visualize the market through that lens. Yeah, I mean, this is a this whole area is kind of key, right? Above, below. My bias still is here to the downside. So looking at this objectively in terms of trends, what do we have? We have a downtrend breakout on yields. Okay. Clone that. Objectively speaking, we have a downtrend breakout. Hard to see on the weekly. Let me throw up the daily. I think the daily probably will show us that breakout a little bit better. Yeah, most certainly it does. Most certainly it does. Okay. And if we just line it up, something like that, we can clearly see we can clearly see this downtrend is broken. Now, what does that mean? It means that locally we have a trend change. And so my expectation here, a local trend change. The dominant trend has still changed to the downside, but I wouldn't be surprised if we saw some type of, underside test of this downtrend line prior to a resumption down. My bias is still down. Let's get back to the weekly chart. Yeah, and so most certainly could get a counter trend rally, but my bias is still to the downside on yields. Other than that, folks, that I think concludes the update, the weekend market update number 2. I hope you have a great rest of your weekend, and I look forward to the next video next weekend. Take care.